everyone. Everyone bring up your charts. Today is going to be something that we kind of move through together. I want to try and relate to that early trader. So I'm trying to get myself a little bit more back into the mindset of an earlier trader, how they were trading and how things kind of, were successful and not successful. In the beginning, I was much more of an emotional trader. There wasn't really so much, this Twitter stuff and that. So I didn't ever really go there. But, I did pay attention to a lot of different, chat rooms, that kind of stuff. And quickly recognized, though, that like developing my own strategy was huge. Something that it's not really my own strategy, but found that it worked for me was a correlation between volume by price, or a volume histogram. You need to have volume, and I have also it as a simple moving average of the volume. So then we're going to have that as our daily. We're going to bring that down. If you don't know where to find that, you're going to go up here to the indicator section. If you are using TrendSpider, you're going to click that section. And if you don't already have it here, you're going to type in volume. You click it. That's ours right there. It's going to... We'll even click it. It'll come all the way down to the bottom. Okay, brand new one. They're going to ask you what you want your length to be. I have it set at 21 days. We're going to exit out of that. So that's step one. Step two, it's going to be volume by price. So you're going to want to put that as daily. If you have TrendSpider, it'll be under indicators. If you don't have this set up, you'll go to this spot right here again, and then you type in volume by price. My volume by price is right here. I have it at 30 days because I want to know what the volume by price for me was for that month. It's very important for me. Usually because I'm looking at analyzing things from the daily. And if I am a swing trader, I do like to know where the movement has been. These are two very important things to have, because this gives you the volume by time, while this gives you the volume by price. Very important to have both things, because they'll be able to tell you when you have an uptick where the point of control, which is right here, right? The most money spent, where is it at? And when you have that volume uptick, like we did here, you have the good opportunity. And when it breaks the simple moving average here, that there's going to be a run. And it literally took 3 days and we had it. Nice run up here. This isn't Tesla. This is just a very simple chart. Next area is very importante. Simple moving average. And I want it to be that you're going to go to 200, okay, at close. We want to implement that. So you're going to go to the indicators list. You want to have the 200-day, the simple moving average, 200-day. I like using the EMA for my closer moving averages, okay? So like the 8, the 13, the 21, because it's more reactionary. Basically how the simple moving averages is to take the close of all 200 days, add it together, divided by 200, okay? So basically the 200th day, right? Like 200 days back, has the same value as yesterday's candle, where the EMA takes into consideration the more relative and closer candles than it does the 200th. So the 200th candle on a 200-day EMA will be less valuable than the last candle on a 200-day EMA, which is hugely important. We definitely want that, and that's exactly something that we look for. So the EMA actually has more wild moves in the sense because it takes into short-term price action, where the SMA is much more of a smoother line, okay? A smoother mover, let's say. And the reason for me, on the long term, I'm okay with the smoother mover, right? I want to catch the short-term price actions. So my short-term moving averages are the EMA, because I definitely want all of this to be taken into consideration and have it weighted heavier than my 200-day. But I also like to see where has my 200-day just moving average just in general, okay? Because I want to know, are we upsloping slowly, right? So for me, my 50 and my 200-day are going to be SMAs, okay? So exactly, S for smooth and E for more erratic in the sense. It's just a little bit quicker mover, right? But I do believe that that's very important for some of the 8 days. And right now, the things that I'm showing you are the most popular things used in the industry, bar none, in the sense that retail traders that are new, even old-timey traders that are into technical analysis, everyone uses these. So what I'm going to do is, if everyone is using these, but I want to at least show you guys that these are ones to make sure you always have in your arsenal, because if everyone's watching them, that means that there's going to be significant price action. And what you want to be doing is capitalizing on that price action. For the most part, most trading things, when it asks you for the time range in the moving averages, it's usually based on candles, okay? So for example, if I break this down to the 15 minute, it's not the 200-day, it's going to be 200 candles. The next one that we are going to implement is another simple moving average, and it's our 50-day. These, the 50 and the 200, are literally the most watched simple moving averages in the entire world. I know that because I used to write algorithms. I just know that for a fact. Go to your indicators line. I want to make sure I see everything because my blind butt wants to make sure I'm good. So I want this to be blue as my 50. And then for the 200 day, I'll do it maybe like a yellow. So now we have a corresponding difference, okay? So now I can very clearly say when there's a crossover, and this is a 200-day, right? And then the 50-day crossing. Okay, so what is it called when a 50-day crosses up the 200-day? This is the golden cross. What we're going to focus on today is the golden cross. For everyone, just so you know, you don't want to fight the flow. Don't fight the trend, okay? The trend is always trend is your friend. Trend is your friend. Just remember that trend's our friend. And while things are uptrending, we're going to be looking for a golden cross. Perfect example, right? This is one, and I can zoom in. It was beautiful. We had a golden cross here, okay, 2 candles or 3 days ago, right? And even if you would have gone in at the top, right, at 714, right, you're up almost $20 already on Tesla here, okay? So it's just important to pay attention to the golden cross. The reason why, the funny thing is, if you look, okay, the golden cross happened here, okay? And which means that the golden cross, it's a close. Remember, our EMAs are at the close. So the golden cross happened here, but means that it wouldn't have been alerted to the community, right? And everyone until the next day. And look what happened. Volume uptick, crazy, right? So what I'm trying to explain to you guys, that there's simple little things out there in the community and within the industry that you know for a fact, not only 4 or 5 people that you know are looking for it, you know that every single fucking person. Okay, so if everyone in the whole entire earth is looking for the golden cross, and if trend is our friend, right, then it's something that you just want to be paying attention to. So basically, what I'm trying to quickly show is the golden cross happened here a day ago, okay? And the very next day, when everyone saw that the golden cross, look what the increase in volume was, okay? People even recognized, oh, wow, it's Tesla. It's even better. I may be a day late. Excuse me. I'm maybe a day late, but I still want to get in, okay? Because like we said, trend is friend. And, right, this thing was kind of in a channel for a little bit, right? So basically, this was in a trend for a while. Every time it went up to this resistance area, it got busted back. So this was a pretty strong resistance every time it got to this upper area. So basically, this is a channel that it's in now, and it's already encompassed it. But basically, it was in this channel where this is the median area. Every time it's hit that, it's either shot up or rejected from. And there's a lot. Remember, the median area and the price of control in any channel is where was the most activity, right? And almost every single bar, except for this dip here, has hit this median channel, okay? So it's very freaking important, okay? So this was a great opportunity for fair value, right? Because it's been trading in this channel where it dipped below this channel, bounced off of our longer term EMAs. Wait until we get to our shorter term, you see everything. It bounced off and then recovered, okay? What I want to show you is when we broke out of this upper channel, this volume uptick happened because, oh, wow, this previous high, okay? Where this basically pegged leg shut us down. When this broke, okay, that was an indication for most people that, wow, this is going to be really bullish and we're going to have an upwards opportunity. I mean, even to the point this thing gapped up. We are going to look at the SMA cross on a daily. The daily obviously is giving us momentum. Look at the 4 hour too. We'll get there, but the 4 hour is pretty nice as well. It's all depending on how you're trading, right? So if you're trading intraday, then you can go ahead and look at the hourly and the 15, okay? If you're a swing trader, look at the daily and the weekly, okay? We'll get to all that kind of stuff. I'm going to zoom out, but one thing that you guys need to do is when you're trading, okay? So for example, most of my trades happen intraday, right? But I do my analysis on the daily. It's very important, okay? You need to make sure that you're at least zooming out 1 iota to make sure you're doing the proper analysis. So perfect example, guys, if I'm a day trader, I'm doing a lot of analysis via daily, okay? Like if I'm doing intraday. If I'm a swing trader, I'm doing a lot of my analysis because maybe if you're a swing trader, you're looking at the daily chart a lot, right? But you need to remove yourself one step and you need to be making more of a price prediction of what you want to do based on the weekly, okay? I'm not going to worry about weekly crosses and stuff, especially because you're probably not going to get that a lot right now. Everything has been so bullish. But what you should be doing is if you're a day trader, remove it from the intra, right? And look at the day. If you're a swing trader, move it from the daily and look at the weekly, okay? But right now, I'm going to focus on the daily. There is no time candle that is best. It is really up to how you trade. Me, I look specifically at the daily, and then when I go intraday, I use the 15-minute candle. During the first 30 minutes, I'm watching the minute candle, right? And I'm looking for volume upticks within that time. I can't watch a 15-minute candle within the first 15 minutes because I get no data, right? I only get one bar. And that's not enough data to be making actionable calls. Now, as the day progresses, I like to be looking at the 15, okay? And trade through that, especially when I'm finding trades later in the day. Like I told you, first 30 minutes, I'm not entering usually into trades. I'm usually looking to be selling, right? Or I might be looking to go short for that flush. But I'm usually not going to be going long in the first 30 minutes. The final three are going to be our burger. We are now going to add the last remaining EMAs, okay? So I want to bring in my 8, and I'll make it, I'll just make them skinnier. I'll bring in my 8, I want to bring in my 13, and I want to bring in my 21. And if you don't have them, you're going to go into here, indicators, okay? You're going to type in EMA. Okay, add that 3 times. 1, 2, 3. EMA 8, EMA 13, EMA 21. Everyone has that. And then also, just to let you know, because the 13 is the most important, I need the 13 to be the biggest out of these 3. Because the 13, remember, I explained this as this is basically your EMA hamburger. This is the bread, but the meat of it is the 13. And as long as the meat is always in the middle, it's going to tell you what trends you're in, okay? Now, if our 8's on top and our 13's in the middle, right, it's a bullish trend. If our 21's on top and our 13's in the middle, it's a bearish trend, okay? But this burger, this EMA burger is going to be treating you wonders, okay? Why do I pick 8, 13, and 21, okay? And it's we've talked about in the past. I used to write algorithm. I used to work in a algorithm development department in a proprietary trading firm. And what they base a lot of their algorithms on is the Fibonacci sequence. So the Fibonacci sequence is very important. And 8, 13, and 29 are Fibonacci numbers. The reason also that we like is it gives you a little bit of a heads up, right? Where all the normies, right? The newbies, the new traders, they like to use the 50. They like to use the 200. We like to use the 10. I like to use the 20. No shit, everyone uses those, right? So what's really cool is when you use these in unison, along with that 21, you get a little bit of a heads up where everyone else probably would be getting in. Like basically, you guys would be getting in on this little uptick, right? Because you'd be watching volume, right? So you would say that right now it's not really bullish, but when the EMA is uptrending on the 8-day, and as long as we are good here, and then we had an uptick in volume, right? The uptick in volume here. The moment that this broke, the price action would have broke 13-day here. The 8-day would have been coincided, and we would have gotten in here at 692, okay? And then rode that thing all the way up to 740, where the other people, if you did, you probably would have waited here. I already looked. So it would have been here on a more like 10 to 20-day cross, okay? So, like I said, everything I've been in the industry. I know how things work. Not how like the big hedges are doing anymore because the freaking AI and the machine learning is insane. And I haven't kept up with that side of the programming. But I do know what algos look for. And they do look for the Fibonacci sequence, right? 8, 13, 21, especially on short-term trading. Okay, so write this down, everyone. So when you have your EMA hamburger set like this, your trend is your friend. And as long as the EMA, the 8, the 13, and the 21 are all uptrending, and as long as our burger is in alignment, you are in a complete bullish trend. What I mean by burger alignment, it is exactly like what I'm talking about. This is the 8-day, this is the 13-day, and this is the 21. That is a bullish hamburger build. The 8 is on top, 13 is in the middle, 21 is on the bottom. That is a bullish trend. The moment that the 21, okay, perfect example right here. The 21, okay, is on top. The 13 is in the middle, right? And the 8 is on the bottom. That's a bearish trend, as you can see here. You see it here too. I mean, it's kind of crazy how far, but look, right? When the crossover happened, see, this all bullish, all bullish, all bullish, all bullish. And then the best time that you want to look is when all 3 EMAs are within 1% of each other. That's when you know you're going to have some pretty good price action. When they all coincide was right here. And then look at the new bearish hamburger. What happened? They all came together. And where it was a bull hamburger, it came together and spit out a bear hamburger. And now the 8 is on the bottom, 13 is in the middle, and the 21 is on top. And you could have gotten in hella late on this one, even like 4 or 5 days after the break, and you still would have banked all the way because the trend is showing you. Now, when these oscillators get wider, okay, in the EMA, it's showing the trend is even stronger. And when they start to diverge, and come together, so they're oscillating, they're kind of separating very strong here, and then here they start to get closer within the EMAs. And the moment that they start to become closer, and especially the 13 and the 8 start to coincide close together, then it's slowly an opportunity for a trend reversal. But it's not a true trend reversal until we have our new EMA hamburger, right? And our EMA hamburger is bullish is 8, 13, 21. Everyone write that down. For the people that are bearish, write down this hamburger. 21, 13, and 8. Meaning on a bearish side, 21 is on top, 13 is in the middle, and 8 is here on the bottom. For a bullish hamburger, 8 is on the top, 13 is in the middle, and 21 is on the bottom. Okay? If you literally follow those in particular, I promise you that you'll alone be a successful trader if you're just following the hamburger method. Okay? And I promise you on that. All right? So anyways, we are, for the time being, we shall be set.